What's going on, good people? Welcome back to another episode of Trade on My Live Account. Today is day number 45. It's August 11th, 2023. We made some trades today, so let's get into it. First and foremost, let's talk about our important levels that we have on the chart today. Let's start with yesterday's closing price, and that'll be represented by this purple line that we have right here at 35,254. Now, this level is going to play a major role in today's session, so we'll get into that a little bit later. Now, below yesterday's closing price, we also have a level of what used to be support at the blue line, but once prices broke back down below that, that turned into resistance, and that played a major role throughout the day as well. And we also have a zone down here below that we drew based on a consolidation area that formed in the market during the pre-market hours. So all of these zones and levels will play an important role. And last but not least, we have this zone towards the top of the chart that was also drawn from a level of consolidation during the pre-market. So let's go ahead and get right into it. So let's talk about trade number one today. Now, at trade number one, I went long here as prices came back to retest the support of the higher low. Now, there were also three higher lows that got formed at A, B, and C. So even though we were in a downtrend leading into the market open, you always want to trade price for what it is. So anytime you start making higher highs and higher lows, no matter how strong the downtrend might have been, you got to start looking at the possibility of an uptrend starting to either beginning from that point or a little small minor reversal where, you might just move back up to a major level of resistance and then the downtrend continues. But either way it goes, you can see a reversal or a small pullback. But more than likely, when you see those higher lows, the downtrend is going to pause for a quick second. How long that lasts depends on the market scenario. You have days like today where it could be a complete reversal, but I've also seen a lot of days where it's just a small minor pullback. So you just got to read the market and play it how it goes. So in today's session, we see that prices came back down to create an extreme at the bottom of the zone, right after they retested this bear trend line. So you would think that the market was moving down. But then once you see this extreme move to the upside, that pretty much tells you that whatever selling was going on, the buyers have taken back over and knocked those sellers out of the way, at least for right now. So of course, you always expect the sellers to come back in, and at a major level of resistance, that makes sense. So once we got back up to the blue line at 220, we did sell off. And if you notice, we were kind of in a trading range between the level of resistance at the blue line at 220 and then the bottom of the zone. That was pretty much the trading range between those two levels. So it made sense for us to sell off when we got back up here to 220. But when you look at the fact that we were not able to come back and retest this previous low that we made and that we stopped right on top of the zone, that right there gives you a lot of information about what the buyers in the market want to do. I'm pretty sure if the buyers didn't step in, the sellers would have had enough momentum to continue the downtrend and eventually make a new low. But it's so much demand down here at these levels that prices reversed, created a higher low. And we know once we see that higher low, especially when it comes at a major level. So it's different if you have a higher low just at a random place on the chart. But when you have a higher low that gets formed right on top of the zone, that makes that higher low even more significant. So after we get higher low B, we move back up to the top of the trading range once again. And of course, it makes sense that we sell off because you have so many people taking profits at that level, as well as people that are expecting the trading range to hold up. So they're shorting that range also. So that's at least two groups of sellers that are selling up here. So more than likely that'll lead to prices continuing down, which makes sense. But then once you get another higher low on top of the zone, now if you look at higher low B was literally on top of the zone. Higher low C came back and got close, but never was close enough to actually touch it. So that's a bullish sign as well, because that's telling you that even though the sellers had all of this momentum coming off of this resistance level at 220, the buyers stepped in with enough strength to not even let the sellers get back to the zone. So that's very significant right there in and of itself. So then we push back up to trade number one. And sometimes when you get a higher low, it might not be a perfect pivot point like we saw at A, B, and C. Those are clearly identifiable, but the higher low at one, you really have to understand how the candle formed and what these wicks mean. So that's why understanding candles is very important. It could be a little small candle like this, but it'll make all of the difference. So once I saw prices kind of come back, create this higher low right here, I circled it up and extended a line of support across and looked to go long as prices came back into it. Now, that's what we were talking about on trade one, right? But sometimes when you use this entry, you got to make sure that the entry price that you select is perfect, because most of the time you really want to get in at that support level at the lows of it. Now me, because I've just seen so many occasions where the market might come 2 or 3 points and get close to that level but never hit it, I like to put my order a little bit ahead of the support level. But when it comes to this specific strategy, the lowest price that you can get is the best price, honestly. And a lot of times it'll come back and literally retest that lowest price to the wick, and then it'll move up. So right here, I had the right idea, but just got in a little bit too early. I think I got in right here at 203, and my level of support was at 197. And I think the low for this candle was 186. So I use a 15-point stop. So if I would have got in at 97 and not at 903, even if I move my stop up a little bit like I did today, I still wouldn't have got stopped out on that. And I would have been able to take prices all the way back up like I did on trade 2, but I wouldn't have had to sustain that loss at trade number 1. So even though you have the right ideas, that entry is still so important. So, you know, that's one of the things I'm working on. I really want to not only get my setups right, but get my entries right too. So then that kind of led us to trade number 2. So once trade 1 got stopped out, anytime I see prices spike back through a trade that I just got stopped out on, and they spike back with heavy momentum, I've just learned that over time you got to take that trade, because yeah, you did get stopped out, but a lot of times the market will come back to stop out all of the people that had bad entries like I did at trade 1. But once that stop run happens, that's pretty much when you get all of the buyers coming back in, because they're saying, oh, okay, we had a false breakout below the level of support and broke back above it immediately. And that usually leads to momentum to the upside, because so many people get back into the market at that time period, because they say, oh, the fake out has already happened, so we're good to go, let's go long. So that's usually what happens when prices spike back to your entry price. So that's what I had happen to me at trade number 2. And I took the trade right there, went long, and then just took it back up to yesterday's closing price, because I was reading the uptrend and I said, okay, we were in a downtrend for a good little minute, but spiked back up to the upside, large reversal, had higher lows, 3 of them, and then I went long on the 4th one. So it only makes sense that this trading range that I'm looking at wouldn't hold up any longer, because even though it is a trading range, once you get a series of higher lows leading up to that trading range, more than likely you're probably gonna break through. It's not gonna be immediate, and you might get some fake outs. Like if you look at it, this candle right here, about 2 minutes after I entered my trade, gave a great opportunity for traders to take profit. And if you were expecting for the zone to hold up, when you saw this long tail candle wick close as a red candle, you might have thought, oh, okay, we had a false breakout out of the range, now we're moving back down. That would have been the case if you had a move like what we had down here, where it was a straight move to the upside and then you broke out past that level. A move like that will probably lead to a false breakout, because there's no real higher low that says that this was a meticulous, like, intentional buy-in run by everybody in the market, because that's what higher lows show you. Higher lows show you that this buy-in was intentional. Prices had opportunities to pull back and people still went long when prices got to better levels. Now a move like this that goes straight up, the buy-in is strong, but it doesn't mean that the buy-in was pre-planned. This is more like a buy-in move where everybody that was short was pretty much just getting stopped out. That led to a stop run, and then people that saw the market going up like this was like, well, let me just get in long right now since it's moving up. So this was more of an unintentional buying type of move. But when you start to see those higher lows towards the top of a trading range, that's telling you that the buyers are intentional and they know exactly what they're doing, and they're trying to do something, which is move higher to important levels of resistance above. And then when they get to those levels, then you can figure out what will happen after that. But when you see those higher lows coming up to the top of a trading range, you always respect those. So that's the reason that I didn't get out when we got back up to the trading range at 220, but instead I let it go up all the way back to yesterday's closing price. And it also made sense to me because if you look to the left, we had a very large candle that led to this overall down move. The next leg of this down move started from this candle. We were coming into a downtrend before the screenshot was taken, but we kind of consolidated a little bit under yesterday's closing price, and then this was finally the move that led to this overall down move back down to 35,120. So it makes sense that the market should at least come back up to retest that level. And then you add in the fact that that's also a couple of points away from yesterday's closing price. I saw that as a really good area to enter my exit my trade, and that's pretty much how I maneuvered my way through trade number 2. And this right here is a setup that I always use. It's called the downtrend reversal that has a higher low that gets established. And I just wanted to talk about that a little bit more and really describe how it works so you can understand the characteristics of it when you see it in the future. So let's go back to some examples from the past. Now, this right here is an example from May 25th this year where we have a very similar setup to what we saw today. So today we saw a downtrend that led to a zone that eventually led to an extreme below the zone where we broke back above the zone and created our downtrend reversal that led to higher lows, right? So this is kind of similar where we have a downtrend, eventually a zone got established. Now we didn't break out of this zone like we did today, but remember, it doesn't always have to be perfect. You know, sometimes the characteristics can just be similar enough where you say, oh, okay, I can kind of see the similarities between the two setups that I'm looking at on different days. So it's not perfect, but it's good enough. So then we break back down below the zone. We create an extreme, right? Below the zone. Then we create a higher low, come back to retest that, and then the move eventually continues. So a lot of times in the market, when you have a downtrend like that, whenever you get that higher low, it can lead to a good reversal depending on what the market is looking like. Now, there have been days where on my past trade reviews, this setup hasn't worked, but those have been days where the downtrend has been super strong. Now on today, the downtrend was pronounced, but it wasn't as strong as it's been over the past couple of days. You know, you can judge a downtrend by really just honestly just taking a look at it. The more that it moves sideways, the less strength that it has. The more that the downtrend moves diagonally and creates lower lows and lower highs on a continuous basis, the stronger that downtrend is. So if you're seeing a more diagonal sloping type of downtrend, this setup is going to have a lower chance of being successful if you're trying to catch that first higher low. But if you have a scenario like today where, yeah, we were sloping down, but it wasn't, you know, too steep of a slope. No, it was a gradual push to the downside. On days like that, when you get a higher low reversal, they can be very successful. Also, what I want to talk about is the strength of the reversal coming off of a higher low. The stronger that downtrend reversal occurs and the further that it moves, the more likely it is that higher low setup will be successful for you. And let's actually compare that, because a lot of times in the market, let's actually go to one of these slides from later on. Okay, this is from April 21st this year. So look at this. A strong downtrend will sometimes create a downtrend reversal higher low established more than once before it works. Now notice on this day, we had our first attempt right here where, yeah, we established a reversal, a higher low, and then we tried to move away, but prices got rejected and the selling was not over. We still had one more leg left to go. But from that point forward, we saw a low get established, a higher low that also came out of a zone, kind of like we did today. And then from that higher low, we pushed up, retested the zone one more time, and then continued to move to the upside. So a lot of times you'll see multiple attempts for that downtrend to reverse itself before it actually happens. And if you look at what happened in today's scenario, we had that same thing occur where this was a downtrend reversal higher low established. This was successful. But this is what I mean when I say sometimes it can lead to a minor pullback or it can lead to a reversal. This right here was the first attempt and it led to a minor pullback. So we had a downtrend. We found a low around 35,185, right? Then we pushed back up to resistance at 220, came back down to create a higher low. Now, the higher low was established right here. So you can draw your level of support across. Now, you probably would have got stopped out on this one because they pushed a little bit lower than where the higher low support level was located. And sometimes it can happen like that, kind of like how it happened to me over here on trade 1. But if you were trading this junction, when it spiked back through that entry price, you would go long right here. But notice how the reversal wasn't completely successful. It was just a pullback. So that was the first attempt. But a lot of times after you get that first attempt, that's the market telling you that, hey, yeah, we're in the downtrend, but the buyers are trying to do something right here. So be aware of that going into the future, because more than likely, if the buyers tried it once, they're going to come back and try it again. They're not just going to give up. And if they do give up, it'll probably lead to a very strong downtrend. So it's multiple ways that this can play out, and always remember that it's never guaranteed that any of this will happen, but you just got to kind of play it how it goes, read the signs that the market is giving you, and use those to your advantage. So on a day like today, we see that, yeah, the buyers aren't in control over here, but we definitely see what they want to do. So then as time moves along throughout the market, it will only make sense for them to come back and try it again. So this right here is the second attempt. Now notice on the second attempt, they had way more momentum to the upside than they did the first time. Way more. So more than likely, that means that whatever buyers were over here going long before, not only were they participating over here once more, but they also had extra people that came in to go along from these levels. Now, I'm pretty sure if we pulled this out to the higher time frames, this level down here would probably be a major level of support on a longer term chart. So, you know, in the market, it's always different groups of buyers that are coming in with, you know, different goals and whatnot. But when everybody is participating at the same time, that increases the chances of a move happening. So always keep that in mind too. So when you have a stronger move like that to the upside, it just means that the probabilities of that second attempt being successful increase dramatically. And let's see, is there anything else I need to discuss? Well, I just wanted to talk about this one real quick, because this is very similar to what we saw today also, where you had a downtrend, right? And then we kind of established, you could call this a zone right here, a little small micro zone, but a zone nonetheless. Then we broke back above the zone to an extreme, came back to retest a major level of support. Now, if you go back to today, kind of a similar thing where we had a downtrend followed by a zone, broke out to the upside, came back to test a major level of resistance, and then we sold back down to create an extreme. If you look at this example, downtrend, zone, break out to the upside, retest resistance, come back, break out of the zone, past the zone, create an extreme that leads to a higher low that eventually leads to a reversal all the way back to the upside. So we pretty much saw a very similar situation today, and this setup happens like this a lot of times. Now, it's not always perfect where everyone is going to look, you know, exactly the same, but there are certain similar characteristics within this setup. And when you see those, you can kind of start to get a better understanding of where the market is going. And once you have that idea, then you can start looking for good entries to participate in, so you can go long and get some profits if they're available. So I just wanted to break that down. You know, I think it's been a minute since I came on here and really talked about higher lows and gave a real like in-depth discussion. So I just wanted to do that today. And yeah, that's pretty much all I got. I would say overall today, my final thoughts, I think I did a very decent job. You know, I think the biggest thing that I'm proud of is my ability to be patient, because when I came into the market, I usually don't trade within the first 10 minutes. But when I saw this bear trend line come back to retest and it closed right here, I was like, man, I should take that short trade. But I stuck to my discipline and I was like, look, I don't trade in the first 10 minutes for a reason. Even if my setups might be there, I'm not taking it because I'm being disciplined and I'm sticking to my plan. Because think about it. If you can't be disciplined with a move that you don't have to take that would have worked, how do you expect yourself to be disciplined when you take a move that you shouldn't take that is not going to work? You're not going to have the discipline to be able to avoid that trade. So I think I did a good job on that, very disciplined. And then I also did a good job of just being patient. You know, it was a lot of opportunities for me to participate within this trading range, but I was like, man, look, I want to see how the market wants to play out. I want to see where the traders want to push the market, and I'm just going to ride the trend in whatever direction it goes. So once I saw the higher highs and the higher lows, I understood that we were in an uptrend, and then I just looked to participate when I saw my particular setup start to form. Today, I didn't take any crappy trades that were outside of my trading plan. I came in, I was focused on what I needed to do, and I stuck to it. And I think going forward into the future, that's what I need to come in and do all the time. You have a plan, you need to come in and you need to stick to it. So that's my biggest goal going forward. You know, this weekend I plan on studying and focusing on all of these things so I can come back on Monday as a better trader. I hope you guys do too. And I also hope you learned a lot from this video about uptrends, about a downtrend reversal with a higher low that gets established, and also about finding those really good entry points, because every single tick matters and you want to get the best possible entry. So I hope you learned a lot about that. I'll be back on Monday. That's not a holiday, is it? No, I don't think so. So yeah, I'll be back on Monday somewhere between 9:30 and 9:40 a.m. Make sure you get your studying in this weekend. Hit the back tester, hit the simulator, hit your notes, do whatever you need to do to come back on Monday as better traders, and I'll be right here with you. But until then, you guys, have a great weekend and take it easy.